Hello students and welcome back to the Financial Academy website. Today it is the 27th of November 2017 and this is our weekly market review for the current market status. Again, just going back to the sidekicks and opening my trading station, we can look for a very good potential during this week. We will start with the dollar index. And over here what we can see is very nicely that we've practically crossed the entry point for the movement beyond the channel that we've talked about last week, going back to the daily chart obviously. And what we can see over here is that the dollar is weakening as we were expecting it to, and right now we've crossed the trend line of this specific structure, and our expectation is to see a continuance of a downtrend on behalf of the dollar. We've talked about this structure previously, and I said that I'm expecting the dollar to gain some strength, and for the long term I'm expecting the dollar to lose strength. And we had an amazing up entry point for this specific potential, the downtrend potential over here, when we've crossed the trend line. Now that was an amazing entry point because we had a very small risk potential that was at the 1201, and beyond that our expectation is to see a continuance of a downtrend movement in such a significant way that will definitely deliver an enormous profit potential. Now let's move forward and see the same example on the euro versus the US dollar. Over here again we've talked about this specific structure. We've talked about this channel, the downtrend channel. I've placed a channel previously on top of this structure. Again, a downtrend movement on the dollar index equals a stronger euro in front of the US dollar, and a cross beyond this trend line has signaled that indeed we're moving forward to a higher rate, to a lower dollar in the market. Now let's move forward. I just want to show you this specific structure over here on an hourly chart. What we had over here is very nice, very logical thing that happens usually when we're crossing a trend line. We know that the market is breaking a trend line, then we've got a bounce back, retesting the trend line. It should be in a corrective pattern, and indeed we can see that this structure was forming a three-wave movement, which is a corrective pattern. We've got the A wave, we've got the B wave, and we've got the C wave, three waves of trying to again penetrate the trend line from the higher point to the lower point below the trend line. And indeed we can see that it did not happen, and we've crossed the trend line of the corrective pattern structure, and right now our assessment is to see a continuance of an uptrend. Now the big question is, where should we place our target? Again, as I told you, everything can happen in the market, but we need to prepare for a specific scenario. We already took the trade with our traders at around these levels, and again our long-term assessment on the weekly chart is to see the market climbing and retesting the higher level trend line, which is around this level. Now in order for us to get a more accurate placement for this target, I will go to a daily chart and I'll mark this downtrend movement, because our assessment is to see an uptrend that will carry approximately 1.618 or 2.618, meaning 161% of this downtrend movement. And let's place the measurement tool that will mark the territory, and you'll see that it's forming a very nice connection between the trend line and the 161 level. Okay, 161 level. So our assessment is to see a bounce and a cross beyond the current levels and approximately toward this target over here. We're talking about between 1.245 and until 1.26. It's a very logical target for this uptrend movement, and we're talking about approximately 4% of an uptrend movement from this current level and until the higher level, 4.3 regardless. The entry point already occurred. If you decide to take the trade, it possesses higher amount of risk, and you need to place a longer stop loss in this specific potential. We already have the small risk potential and a large profit potential trade, meaning low risk trade entry point over here, and right now the market already went toward our prediction. And a very nice thing that I can say regarding the dollar is my confusion last week regarding the dollar in front of the Japanese yen. From time to time we see that the corrective pattern is forming a different structure than what we're used to, and I can definitely say that right now my assessment regarding this specific structure is that this is an entire A, B, and C corrective pattern structure, meaning our expectation is to see a continuance of the downtrend of this channel, breaking the channel and moving forward to a lower rate. Now, how could this happen? Because this specific structure is an ABC, just an extended one, meaning that we've received the first A wave, the B wave, 3 waves, and the C wave climbing up. And right now we've formed a completion of 3 waves, which is the B wave in the middle of the corrective pattern. Again, our assessment is to see a continuance of a downtrend on the dollar in front of the Japanese yen, which is again correlated with the idea of a weaker dollar on the dollar index and a weaker dollar in front of the euro versus the US dollar. I wish you all the best with your trades. Have a pleasant day and bye bye.